Hi everyone and welcome to the London session update with myself, Kathleen Brooks, on Thursday the 11th of July 2013. Well, it has been a huge week for the markets, a huge 24 hours really. We saw a massive uplift in euro dollar. That rose by 400 pips overnight. The key driver, well, that was the Federal Reserve. We got some Fed minutes and they struck a much more dovish tone than we've seen for a very long time from Bernanke, the governor of the Fed. If you remember back to the June FOMC meeting, Bernanke gave a press conference and there was a huge amount of speculation that they could start tapering asset purchases potentially as soon as this month. Well, that has really been rubbed off the board completely now, because the minutes really show fears about the fact that employment might be overstating the strength of the economic recovery, fears about inflation as well falling too far, fears about growth out in the future, and also fears generally about more generally sign that the tapering is going to happen certainly this month have really been taken off the table, and there's still a real open question about whether or not they'll do it in September. Now that had a big impact on the federal on treasury yields. We saw them come back, we saw gold rise, but where we really saw the action was in euro dollar. Let's take a look at this daily euro dollar chart. As you can see, had a really nice bounce off of those lows, 127.60. Now that looks like more of a medium term low now, because we did have a nice bullish harami, good strong bullish reversal pattern there. However, there was a huge crushing wave of selling pressure at 132. So that suggests to me that in these summer markets we could be range trading. The other thing I want to show you as well is the MACD chart. So momentum indicators also turning bullish on the slightly longer term chart. So that is also a positive thing. Now, where else we've seen a lot of volatility in the markets has been the oil market and commodity prices in particular. Now, they have risen. Remember, commodities as well, they like the sign of both a strong economy and central bank stimulus. Let's take a look at WTI. This really has been a massive outperformer. It's outperforming basically because of a better growth outlook in the US relative to Europe, also because of high demand for WTI crude, especially since there's been tensions in the Middle East and concerns oil through the Suez Canal near region. That really has pushed up demand for WTI, and of course there's expectations of increased demand back home in the US as well as the economy picks up. So what we saw yesterday as well, just adding fuel to that strong oil fire, was some crude inventories. They dropped very, very sharply last week. Dollar barrel drop, and we had expected half that amount. So a lot of kind of supply and demand pressure building on WTI there. We got above that. We got above a really key resistance level, 103.60. Since then, we've just been marching higher. We're close to 107 now, which really opens the way to the March 2012 highs at 110. That's also a key psychological level. So do watch out for that there. But right now, what the Fed is doing, very positive for commodities, very positive for the euro as well, and keeping the lid on dollar gains there. So good luck trading today, and please do join us soon for more. Thank you.